All right, guys, welcome back to the channel. My name is Camilo from Trending Waves. I hope you guys are well. And what we're going to do here today is we're going to review the SPY and the Qs. We're going to look at our Elliott wave count. We're going to look at the bullish count and the bearish count, okay, to try to determine whether or not this recent price action is the low or if we're still expecting for the downside. Okay, guys, so before we dive into the analysis, give this video a thumbs up and subscribe to the channel. It'll help the channel grow. So let's take a look at our daily time frame for the SPY. And here we're still looking for the following, right? We've always been interpreting this count or this structure the following. Okay, we're looking at this as the wave one. This is the wave two, right? A, B, C into the two. We're looking at the third, and now we're here in three waves down into the fourth. Okay, guys. So it's holding, right? I mean, we see a bit of divergence here in the daily time frame. Okay, we see divergence, positive divergence. Okay, our positive divergence is this, right? We see that price action on January the 24th made a low here on the RSI. Then we bounced, okay, we bounced on the RSI, and then we made a new low here on February the 24th while still maintaining the high on the RSI, and we're still making a new higher high, and potentially that's where we're going to stay, right? If that's the case, guys, so let's dive down, let's turn on our labels, and let's review what the possibilities of a bounce to new all-time highs is going to be, or at least the start of one. All right, so for that, we're going to look at our main count. And in the main count, this one is suggesting that the wave 4 found support at 38.2% retracement, or 412.18, not 412.18, 412.88. Okay, that suggests that maybe we find the bounce that we're looking for. Okay, 38.2% retracement is a pretty common level for a wave 4 pullback. Okay, well, you may be asking, how do you find this 38.2% retracement? So you take this retracement tool, right, this fib retracement tool, and you take it from the low of wave 2 to the high of the wave 3, and you turn on your ratios. In this case, are 38.2. Okay, so with that being said, okay, we're still, if this is the case, then we're looking for the final fifth wave of the cycle degree wave 5. Okay, let's dive down into this zone. Okay, and let's see what price structure looks like there on this count. So the 1 hour time frame, guys, okay, the 1 hour time frame is suggesting the following. So out of our wave 3 completion here on January the 4th, ABC down to the W, X, ABC down to the Y. And I know I've repeated this many times in my previous videos, guys, but this trend line here has been a headache. All right, it's a very important trend line to see if we could break above it, because when we topped out here on January the 4th, it's been confirmed he has resistance, sold off, confirmed as resistance here on February the 9th, sold off, confirmed here on the 17th, sold off, and then confirmed here once again on the 3rd of March, and then we sold off. All right, so here we are now. I'm gonna take you guys down to the 15-minute time frame. I think this is a little bit more a little noisy, but it'll tell the story. So when we completed our structure here on February the 24th, we made our initial wave 1 in the minor degree, ABC to the our initial wave down to the A, to the B as resistance in the trend line, to the 1272 retracement of wave A and B, and then we got our 5 waves down to the C. Now this C wave of 2 found support at the 786, which is appropriate. I mean, it's not out of the question, but it's not common either, and it's not favorable to see a wave 2 fall this deep. All right, for that reasons, I've been holding on the sidelines, because we want to see what price action will do around this level. And so far, we've been holding it. All right, we will normally see the continuation to the downside maybe a day after, but so far we've been holding and making a higher high. So that's good news. So the way we're looking at this here on the bullish count, guys, is that we made our initial wave 1, ABC to the 2. Again, very deep correction. I don't like it. But then we go to the 3rd, small wave 4, wave 5 to the 1. Maybe this is the ABC to the 618, and now we're looking for the 3rd wave. If this is the case, guys, we want to see a break above 426 and break this high here at 429 or 430. So these two zones, guys, this zone here, we want to see the SPY break. We want to see the SPY break above this zone here and continue on higher in order for us to contend the fact that, or entertain rather, the fact that this might be the count and the bottom, right, essentially on February the 24th. If that's the case, then we'll take an extension, right? We'll look for this wave 1 to the 2 down to the, sorry, to the 1 to the 2, and we'll see that the third wave will break the high, okay, and in confluence to a resistance point here in this pivot area on the wave A. Okay, so pretty coincidental, right, guys? You might say. So it's falling in place at this point, I think, and I'm pretty excited because if we continue on higher, then this will be the wave 1 in the minor degree, all right, of 3. And then on any pullback is where we should start loading or consider loading up into the potential wave 3 of 3. Okay, guys, if that's the case. Okay, so we're gonna wait a little longer, a couple of more days, and maybe we'll just trade sideways, and then maybe into Powell we may see a dovish action. I don't know, and then we head on higher if that's the case. Otherwise, guys, let's focus our attention. That's not what I wanted to do. Otherwise, let's focus our attention into our alt count, which is this wave 2 here. Okay, so this is the most likely scenario, I say, all right, based on how the chart is working. Now, you know, this also falls in line with what I just mentioned over and the other count, which is, you know, what will the Fed do, or are we going to trade? You know, based on CPI data today, we kind of traded slow, and it was really weird, I'd say. And so for that reason, I think that the markets are now expecting more what Fed is going to say next week, and for that reason, we might trade sideways and into new lows before Wednesday, or into Wednesday of next week before we see the rally. Okay, I don't know, just hypothetically speaking, but when I presented this count to you guys, okay, I told you watch out for this 618 and the 50% retracement as a resistance zone before, you know, when we sold off. Literally, this was on March the 9th, which was yesterday, and sure enough, we got this gap down, but we're trying to fill the gap. All right, so this may be the 1, the 2, 3, 4, and 5. Okay, so this is how we're looking at this, guys. So 1, 2, 3, 4, and 5 to complete this cycle, okay, into next week. So it all depends on what we do overnight in the futures market. If we see continuation in the futures market above this zone, all right, there's another way to look at this. Either this is an ongoing B wave, okay, this will look like something like this. This will be the A, B, and C, which is appropriate, okay, and then we get the sell-off. Or this is already the B wave, all right, and this is the 1, 2. So let's take a look at our retracement tool here. Let me zoom in. So the 618 is holding us as our resistance right now. Okay, 618 of a retracement of the 1. Although we only see 3 waves here. Let me go down to the 3-minute time frame. Let's see, 1, 2, 3, 4, 5. Maybe. I mean, this is forcing it, guys. I don't like it. So 1, 2, 3, 4, 5. All right, and then 1, 2, 3. Or 1, 2, 3, 4, and 5. You know, it's a little bit tricky to count this at this level, at this time frame. So for that reason, if this is the start of an impulsive structure, I mean, we see evidence of that, right? We may see evidence of 1, 2, 3, 4, 5 to the 1, 3 waves pull back into the 2, and then 5 waves up. So we'll wait to see what price action holds around this zone, or if we see continuation above this area here. Okay, guys? So let me know if that's clear. Let me know if not, and I'll be happy to answer any questions. Leave them down in the comment section below. I'm gonna take you guys back up to the daily time frame, and we're gonna quickly review our last alternate count here, which suggests an ongoing correction, which is, I think, the one that a lot of people are favoring. I mean, a lot of the bears are favoring. So out of our COVID lows, we have the wave 1 in the intermediate degree, ABC to the 2, 3, 4, 5 of primary 1. Now, while this may be a short-term bearish scenario, longer term, talking about years into the future, this is the most bullish count, because that means we are gearing up for the third wave after we complete this wave 2 this whole year. Basically, this whole year. I mean, it's not likely that this wave 2 will just run its course somewhere around the zone. It's I don't know. I don't think so, based on everything that's been happening. So I'm likely favoring that this is the A, B, C to the A, 3 waves to the B. This B wave could take us above us as a expanded flat above the high here, or not. Just all depends on where this A wave completes, and then we get the retracement. Then we'll be able to determine where this wave C may be potentially ending. Okay, that is if we start seeing price action head on lower. Okay, guys, and how do we know if we are going to be in this zone? We will know after one thing, right? We will know if we start breaking below this wave 1 and this wave 1 here. So we have to keep our eyes open for 393 or 400. Yeah, 393. And we're going to have to look at for 358, all right, on the SPY. If these two zones, I know that'll be late in the game into the wave 8, but that's what corrections are, right? We have to, either way, if you know, just as a side note, trading corrections, it's very hard to understand the beginnings of one, right? You will know you're in the correction once you see that retracement. So the wave A in this case, it will be unfolding right in our faces, but we will know that until we break certain levels. But in this case, these levels are way too deep into the market. You know, otherwise, so once we see that, and then we see the 3-wave retracement, is when we can start to look for short positions in the wave C. But, you know, if we want to get a little bit more deep in details, the warning signs will be there once we start breaking below the February 4th low. Sorry, the February 24th low. That'll be like one of the signals. And then we see, you know, then we see a break below the 50% of the wave 4. All right, I think I ranted too much on this one. Let me go take you guys quickly over to the SPY. I don't want to lose your attention here, because this is, sorry, to the Qs, because this is important. So in the Qs, our bullish count suggests WXY to the 4 over here, 1, 2, holding support, and now we're in the makings of the third wave. Okay, guys, so we want to see a break above this trend line, a retest, and then we go, and then we'll consider a potential trade. The alternate count to that is going to be this one, where we're still in a corrective wave for pullback. Third wave completed back here on December. 1, 2, 3, 4, 5. Truncation in the 5th of A. 3 waves pullback into B. 1, 2, 3, 4. A, B, C down to the 5 of C of 4. Now we want to see price action hold 338 and 334 in order for us to count the fact that this is going to see for the price action to the downside. And then last but not least, our favorite count, which is the bearish count. Obviously not. I don't want price action to go this low, but 1, 2, 3, 4, 5 to the 1, A, B, C to the 2, and then we'll see what happens here. All right, guys. So thank you so much for tuning in. Let me know if you guys have any questions. Leave your comments down below. Subscribe to the channel. Join TradingView's. Link to the Discord group is pinned down in the comment section. Take good care. I'll see you guys tomorrow.